to normal people out there and to journalists like me, myself, and many people here, but also to many of the professional prediction makers that work for banks or large investment companies. So people here at the moment are really very reluctant to predict a clear trend for the markets. Volatility expected to continue. And of course, continuously, people on the markets are going to be glued to their TV screens and to their, computer screens, waiting for every detail and piece of news from Washington and for what we can expect in terms of, Trump's administration. And in light of this, it's going to be very interesting to see what's happening next Thursday. Janet Yellen, the Federal Reserve chairwoman, a woman who was appointed by a Democratic president and who is said to have a Democratic point of view on the world. She's going to give a speech in Washington, and it's going to be very interesting and important to see for people on the markets what she has to say after Donald Trump's elections and whether or not it has influence in some way her point of view of monetary policy. Remember that everyone on the markets expects interest rates in the United States to be rising by December. In terms of earnings reports, the earnings season is slowly coming to an end. We are facing an enormous amount of economic data, as always. Among this data is going to be the update of the German gross domestic product in the third quarter. Also, the GDP for the Eurozone will be reported. That's tomorrow. And the U.S. industrial production will be updated. So I'm sure we're going to have a lot to talk about this week, Jimmy.
Well, we'll keep our fingers crossed to see what those data will turn out to be like. Thank you very much for your time, Conrad. That was Conrad Busen, DWTV, Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. And we come back here in Nigeria, where the consumer inflation has reached 18.3% in October, higher by 0.83% from September and 0.48% over a year period. A set of new data released early today by the Statistics Office shows food sub-index higher at 17.1%, while all items except farm produce climbed to 18.1%. The data shows inflation in urban centers was by 0.81% last month to 15.3%, while inflation in rural areas also climbed higher to 13.3%. Contributing to the surge in headline consumer inflation last month were higher prices of food, energy, and transportation. Today's October inflation comes just a week before the Central Bank's Monetary Policy Committee meets next week, Monday and Tuesday, to decide on interest rate direction for the last time in 2016. And of course, the Debt Management Office is planning to sell 95 billion naira worth of bonds on Wednesday, November 16. The office would sell 35 billion naira of a bond maturing in 2035, 25 billion naira of paper maturing in 2026, and 35 billion naira of debt maturing in 2021 using the Dutch auction system. Let's see how the market is gearing up for the auction. I'm being joined by a fixed income dealer with UBA Group, Afam Ifuna Ume. Good afternoon, Afam.
Good afternoon, Chimege.
Now, it's the first trading day for the week. What sentiment have you observed in the market today?
Okay, today with the release of the inflation figures for October, which came out at 18.3, what we've witnessed today in the fixed income market has been bearish sentiment. There's been a major sell-off across maturities. This is also due to the tightness in system liquidity. Money market rates at the moment trading within 25 to 30%. That high, which means the liquidity in the system is quite thin, and investors, basically traders, are finding it hard to basically get this liquidity. So they're selling down on their security portfolio, they're selling down on their holdings to be able to meet up with their liquidity concerns. So with the inflationary pressure continuing, it is highly impacting on the market as regards the rates as well.
A bond auction is being expected on Wednesday. Now, how much impact will that have on market liquidity?
Well, what we've seen at the moment, we have 95 billion for the bonds. We have 119 billion for the NTB, which is the primary auction. We also have the OMO maturity as well, which is going to mature this week. However, we do not expect that there will be any inflow of liquidity. So we expect liquidity to still be tight. We expect that the rates will continue to remain high, and we expect bearish sentiments going into the auction as well. We expect the stop rates at the auction to basically reflect what market sentiment is at the moment, which is basically people looking for higher yields as the liquidity remains tight in the system. So for the bonds auction, we're looking at between 15.5 and 15.7. And for the Treasury bills auction, we're looking at rates between 18.5 18.6 for the longer end.
Right. Looking into the week, what is the general outlook for this week?
The outlook for this week is bearish, basically.
Right. Bearish. All right. Thank you very much for your time, Afam. We move on now to Egypt. The International Monetary Fund has approved a 3-year $12 billion loan for Egypt to help the country out of its deep economic crisis. Egypt will receive $2.75 billion immediately, with the rest subject to its economic performance and further reforms. IMF Managing Director Christine Lagarde said the bailout would address long-standing challenges. Egypt's President Abdel Fattah al-Sisi is facing high unemployment and a budget deficit of 12% of GDP. Last week, Egypt floated its currency in a move that reduced its value by almost 50% against the dollar in an attempt to strengthen confidence in the economy. I will take a quick break now. When we return, of course, the program continues as we will be looking at some of the earnings reports coming out there from companies listed at the consumer goods sector. To stay with us.